Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of November 27th, 2023. I hope you all had a great Thanksgiving last week. We had a shortened week, and we are going to go through what happened with the S&P 500 last week, as well as where we are year to date. We're going to talk about the economic numbers coming out this week and what the different sectors did last week, as well as what their maybe good bets going forward. And then we will finally jump into the trades that we have on the Tastytrade trade platform. I think it's super important that we understand all the strategies that the rich are using to get richer. Then we can utilize those same strategies and profit in any market. Before we start, if you appreciate the effort that goes into making these videos, all I ask is that you please hit that like and subscribe buttons. I really appreciate it. It helps the channel a lot, so thank you very much. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, here we are looking at the SPX, and this is actually the 5-day chart and where we were last week. We started the week at 44.14 over here on the left, and we ended up at 45.59 where we are today to start the week for November 27th. We're up about 1% last week on the Thanksgiving shortened weekend and 16% year to date. We started the year, if we look at the year to date chart, we started at 38.24 and again 45.59, so we are up quite a bit, 16% already this year. The PEs were above 18. I think we're about 18.7 right now. The 10-year average is 17.5, so we are a little bit above the average, still fairly valued, but just slightly high. And if we look at the economic calendar, the main item coming out this week is core PCE coming out on Thursday. So we want to see where we're at there. The previous was 3.7 and the forecast is 3.5. So it's good economic news if it continues to come down. And then if we look at the different sectors on the 5-day, you can see we were up 1%. Everything was pretty much up. A little bit lower volume with the Thanksgiving holiday. And then year to date, you can see as well the communication services, the Facebook, and the those are still up big. Meta, Netflix, a lot of the tech, the Qs. That's why tech is up. And then you can see down here as well, technology, XLK way up 48%. And then consumer discretionary, which I'm surprised is still up quite a bit, 30% year to date. So with that, let's jump into the trades and see where we're at. The first one that we show is AMD, and AMD is trading right now at 122 and has an IV rank of 19. So it's up a little bit from the prior week. I think it was at 120. And I've got a trade on actually to close the put side of this. I still think if we look at the chart, we're near, I don't want to look at the 1 year. I'm going to look at the shorter. Let's look at the 1 month chart and 30-minute. This is a good time frame that I like to look at, but you can see, there is support at 125 and we're at 122. And if we look at the actual trade, 125 is my call, short call. So we are still in the profit zone. I expect it to stay under this 125. If we look over on the right and look at the order chains, over the last 30 days, we've made, $354. So we've done pretty well, and year to date we've done well as also. So there's AMD. Chewy, I believe, has earnings. So if we go over to the left here and we click on positions and IVR, I've got it set up to where I can see earnings as well if I move out a little. And you can see on December 6th, the earnings is coming up. So still a couple of weeks away, but that's why the IVR is so high at 68. I've got a strangle on the 20, 20 and a half. And if we look at the chart, we're, 20 to 21, there's a range that it's been staying within. And then the next level down is, just below 20. But, I'm looking for it to, here's the profit range, looking for it to stay within that range. We'll see what happens after earnings and then make adjustments. But Chewy is a good company, and we've done pretty well. Let's see, a little over $100 in the last 30 days. Haven't traded it a lot, but they are a great online store, and people love their pets, and they're gonna continue to order, and it should do well. Going back, Boeing, I'm gonna punch that one in because I did close that out last week, but Boeing was up. I didn't put it back on because if you look right here, IVR is 0. But you can see, just in 30 days, we made $465 in Boeing trading it long, and it's pretty much gone straight up. But Boeing is, I've got to wait to put that back on when IVR is a little bit higher, because I do have a target of 225, but we're actually nearing that target. So yeah, this one's not really in play right now for me. But I've got a couple other defense stocks, L3 and Lockheed Martin. And Boeing's defense as well as commercial airlines. DraftKings, we've talked about this one. I really like DraftKings. I've got Leaps options, the deep in the money, 400, so just over a year out. Once they get to a year, if I'm going to continue to hold these and I think it's going to go up, I'll move those out. I'll close the Leaps and then move out closer to 2 years again, because I don't want that time decay working against me. Once you get inside that year mark. And then I've sold calls against it. And last week I actually rolled out my one of them from December, and I moved it up and out to the 40 call to allow a little bit more room for it to move. And DraftKings has done really well. I think over the last year, we've made a couple thousand, $2,016 just trading DraftKings and selling calls against the Leaps. So that's worked out pretty well. And it's been moving up quite a bit. So, a covered call position is a long position. It benefits when the stock goes up. So that's why we've been making money. Humana Insurance does well in high interest rate. They've got a ton of cash. I moved out my put spread last week. So I closed the shorter term December and moved out to January, since we were, at around 21 days. I put them on typically at 45 days, and I take them off, at 15 to 20 and move them out if it's still a good play. IVR is a little low right now, but IVR is low in everything right now. And I have a 580 target on Humana long term. And, we're still below that. So I do like it. We've only just started trading it in the last 30 days. So, we've made $156 in 30 days, and we just moved it out, and we're going to write it up some more. L3 we talked about. We've done pretty well in L3. It's a defense stock, and it's 190 today. It moved up from 186 the week prior to last week. And we've done pretty well in the last 30 days, $388 in L3. I've got a target of 240. It's at 190. And it's been moving up. But, I pick my targets based on, I move out to say 5 years, and then I look at, we can move it out to the weekly, and then you can kind of see the trend line that I've drawn, and it's way undervalued, but I know the defense industry a little bit. I've been in tech and selling specifically to defense companies in the past, and L3 is a good company with, and I think with the wars going on right now, I think defense, you've got to have some defense exposure. So I like L3, and I also like Lockheed Martin, and we've done the same here. Lockheed, I'm still in December because we're at 450. We moved up. We're just now getting into the profit zone on Lockheed. So I'm giving it time to come in further and make more of that. You know, you see we make $190 if we get up, if we stay above this range. And we've done, you know, just in the last 30 days, 232 in Lockheed. So I'm holding on to that one a little bit longer, but I did roll out L3 to January because it was already profitable and we had come in a lot in the options that we had on in December. Palantir, I've got a leaps option. I'm long Palantir, and it's kind of at the top of the range. It seems to trade between 15 and 20, and right now, so if we look at the range, it's hard to look at a long-term range for a stock like Palantir. But in the short term, it should continue to do really well. But here's the range. Yeah, 21 down to 18 and then even down to 14 and a half, 15. But I kind of, you know, I stay long and I've got a, you know, it's hard to come up with a target too and value the stock, but they're doing extremely well and they're in commercial and defense. And it's a huge AI software growth company. So the long-term outlook for it is very good. And in the last, I don't know, 6 months, if we look at, you can see we've made $457. So we've done pretty well in Palantir. SoFi, I love. We've been getting killed. It's way down low. I think it's a buy. I've kind of backed up the truck. I've got 11 long calls and 300 shares of stock. I don't sell calls against this just because it's such a low priced stock. I don't want to hinder it any, and so I'm and there's not a lot in the calls, but you know, anywhere above 9 and it can move up quickly. It can, I think it's going to be a major bank, so that's why I'm long SoFi. SQQs, this is the ultra short Qs. So when the market's way up and IVR is low, that's when I buy these. And if you look at the chart, my cost basis is 16.81 and we're down at 15.9. But any move down in the market, these will move up, and that's when I'll sell the SQQs. TDOC, Teledoc, 2 long, 15 calls, and we've done pretty well in Teledoc. Let's look. We've got IVR is only 5 right now, but I've been doing leaps and poor man's covered calls, and you know, any big move up, I'll sell a couple of calls against Teledoc. But you know, we've been doing pretty well in the last year. We've made $378 in Teledoc with the options. And Visa, we've got a put credit spread. It's moved up and we're near max profit. We're still in December. Visa is going to do well in the higher rate environment that we're going to have for the first you know, half of the year. They're saying May now will be possibly the first interest rate cut, according to the Fed Watch tool. But we've made in just the last 30 days, I think $300. Yeah, we've just been trading it. Yeah, the last 30 days, $311. For Visa, I do have a target of 260 and we're at 254, so we're getting up to that range. It's been moving up, and that's why we've done well. And IVR is 0, so I'll probably look to just close this out and probably won't put it on until there's some sort of pullback. But it's tough with the IV rank so low and it nearing the target. So actually, I'm going to put on well, $29. It's not going to come back down. Yeah, I don't want to wait 19 days, so I'll probably just close that out. Click on close, and once it gets down to $15, I'll do a good till canceled order, send it, and now we've got that on. Verizon, we've got 100 shares. Any down move, I'll probably buy more, but it's a good dividend stock. It pays a big dividend, and my target's $40. We're nearing that now because it's had a big move up. The monthly range is like 31 to 36, and actually we're at the top of the range there. And I would sell calls against it as well, but IVR is just so low in Verizon right now. Wells Fargo, one of the banks. I closed out my B of A. I just thought it was going to be a while till these come back. But actually, the banks have done pretty well lately, and Wells is coming back. It's at close to 43 now, and but IVR is just so low at 0, but it has moved up recently. And then finally, ExxonMobil oil is really surprising me that it's this low with the SPR, the Strategic Petroleum Reserves, so low right now, and being at war and not energy independent. So I'm bullish oil. I think oil will go up, and I think companies like ExxonMobil will continue to do well. We're at 104 right now. We're still in between my 110, 105 put spread. So we're profitable down to 105. We're just about at the profit zone, but I expect that it's going to move up, or that's what I'm hoping. But I'll probably just roll out. It could be next week or the week after that I'll roll out to January and stay long ExxonMobil. I do have a 128 target, and it's trading at 105 right now. So let's take a look at earnings for next week. If we go here to the left and go on all earnings, and then we can sort by date, and we can see earnings next week. Okay, the 27th, which is tomorrow, Monday after the bell. I don't even know ZS, but Zscaler, yeah, tech company. And we can look at the year to date and the daily. Wow, Zscaler's up. HP, I haven't traded that one in a long time, but that's Tuesday after the bell. If the arrow is after the bell, that means after the close on Tuesday it will report. Going down, VMware, doesn't say before or after the bell there. CRM, Salesforce. So that's Wednesday after the bell. That will be a big one, and will move technology stocks. They're a big leader in Mark Benoff, the CEO. He's always on CNBC. But we'll see how they do. It's been up to 24. I'll have to take a look at that. And then Snow is one that people play. Ulta, retail, Marvell, tech, Dell. But these are the earnings plays next week. So keep your eye out. I will also be talking about SPX. I've got a video coming out this week that I'll put out. So keep your eyes out for that. It's going to cover a simple trading strategy for trading call credit spreads in SPX. All right, guys, I put a link down below for the free options workshop. Remember to grab that. Please hit like and subscribe. Let's get this video out to as many people as possible. It really helps the channel, so I really appreciate it. Check out the links. We've got very reasonably priced options coaching. There's an automatic options income course, as well as a link to Tasty Trade. If you open an account, you can get cash back. Thanks for watching. See you in the next one.